Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at some uranium stocks. We'll do some analysis on it. I was doing this with the Platinum members for technical analysis training. It's part of the training. It wasn't all of it. But we did some analysis on Camco. We did some analysis on some other companies. And I want to share a little bit of that with everyone. You guys then get to see kind of some of the things that we look at. And you can also get some, I guess, information about the uranium market. So we'll dive in here. I'll give you my financial opinion. We'll see if some fractals line up. We'll see if what the timing looks like and stuff like that. So let's do some analysis on CCJ and see what's going on here. And all you uranium guys, I know I've got a lot of uranium viewers. You might appreciate this. So we're looking at CCJ from a big picture view. This is the mid 2000s back in this vicinity back here. We had the big bull market in the later 2000s, all the way up to a peak of 2007. We've got another time frame coming this way, and we could potentially be moving on up. So one thing that I think is apparent here is this is a wave one, a pullback, and then a wave three could potentially be coming in front of us. So one thing I did when I was evaluating this, I said, okay, let's just do a trend-based fib extension on this. I took the low and threw it all the way and clicked it to the top, brought it all the way back, and said, okay, how big could this necessarily be? I know a lot of people like talking about that. And using this tool, a lot of the times we can get somewhere between 2.618 and 3.618. 3.618 puts us at $200. 2.618 puts us at $150 for Camco. That is two price projections you have. If you use the bottom to top, that was a first wave. And then we are putting in what could be a third wave based off of all of these projections. So another thing I did is I took the bars pattern, which is basically this lead-in fractal. Said, okay, if this is the fractal, that's this guy here. If this is the fractal, and I overlaid that fractal, what does it look like on this fractal here? So what I'm going to do is I'm going to have to go big here to make the fractal the same size as this lead-in pattern. So here's the fractal here. I think that the lead-in could be something on the lines of, see if I can fit it in there kind of more perfectly. Something on the lines of perhaps that. So if I zoomed in, let's get some zoomage in here, hit auto. What this could potentially be is the fractal where we get this lead-in pattern, and then we come up inside of it. This is the fractal here. As we go up and down, this fractal, it's not going to be perfectly the same. And we get a little breakout, a little pullback, come on up, and then break higher. This says maybe $67 if you were to use it the way that I have used it. We could also look at this perhaps even differently. We could try fitting this fractal here much larger and compare it to the move. 1 second, guys. And if I were to take the fractal and put it more on the lines of this, there we go. It's lining up pretty nice now. Okay. So this fractal is a little bit larger fractal. If we were to zoom in and see how this lines up. So what I did is I lined up this kind of hump there, and we come up through this, and we get this nice big pullback, and it looks very similar to the movement that we have for this lead-in. So the fractal matches it quite well. The projection for that, if the fractal lines up that way, which I think is a closer lineup, $160, which falls in that that other projection of 2.618 to 3.618. So I think that that fractal lines up very well. I can also play with other fractals with other companies. We've talked about Bannerman. So if I pull up Bannerman on the Australian exchange, and this is one of the fractals I was playing with. So if I were to take the fractal here, the lead-in pattern, and say that this is the fractal that we're going to compare here, I'm going to place it kind of over it, and then I'm going to have to very much blow this up and show you what this fractal may look like if we can get it to match. Maybe something like that. Now, if I were to zoom in, tell me this doesn't look like the fractal is pretty close to a match. We start down here. Now, there could have been some other lead-in data that we don't have on this company, but we have that lead-in pattern just like we have in ours. We've got the pullback. We could pull back a little bit more. This is saying that we could pull back. If the fractal were the same, we could pull back a little bit more before the launch. And again, this is just a fractal. I'm just comparing these. We do have what I consider to be that lead-in pattern that I always see. And if we were to zoom out, you can see the fractal there as we zoom out. A fractal is a pattern that repeats on different time frames. We also have massive volume that's accumulating. So that's also a positive. The projected move of this is like way up there. I don't know if this is going to go that high. Don't know. It says that it would peak at about 2026 at $120. I don't know if that's going to be the case or not. And if I were to do a trend-based fib extension for the heck of it on this, bang it down here, throw it all the way to the bottom, it actually aligns. The fractal aligns with a move between 2.618 and 3.618. So if this was a wave one pattern here, and we were to use Fibonacci sequences, the fractal I grabbed from the previous bull market, overlaid the size of the fractal on top of this, basically aligns with the wave three move that falls between 2.618 and 3.618, which is actually where most fractal or where most stocks actually go. So this could be a pattern. We could see a little bit more downside in front of us before the big move. That is a possibility. I'm not claiming for that because the moves are going to do what the moves are going to do. Obviously, they don't have to follow the fractal to the exact movement, but a lot of things, they oftentimes rhyme. But this is showing us that we've got multiple things telling us that we could go a lot higher. Now, I know a lot of people are saying there is dilution in this company. Therefore, I can't be doing what I'm doing. I would disagree because, the value of this company has also, if you were to look at it from a pounds in the ground perspective, the value is also far different than it was before. And if the dilution is in fact the worry here, well, then this fractal size that we have coming up, this lead-in pattern of the fractal, would be much smaller. And if that fractal was much smaller, then the upward move would be smaller when I went to adjust for the size of it. So I think it's probably pretty close to a very good match. And I think a lot of it highly depends on the price of uranium. Now let's do this same analysis very quickly on something that has nothing to do. We're going to go to Ethereum. And Ethereum, if we were to say that this was wave one, and then this is wave three, so basically we're applying the same thing that I was applying to Bannerman, except Bannerman in 2007 was wave one, and this is going to be wave three. I'm going to do a trend-based fib extension. I'm going to zoom in on the company here. Go all the way to the top, bang that out, click on that. Now I'm gonna zoom out on it, and guess what we have here? I'm just gonna move this to the right. This is Ethereum. If this was wave 1 and this is wave 3, you can see that we basically fell between 2.618 and 3.618 of these two areas with Ethereum. So the first fractal size, the first fractal here, explains the other fractal behind it with using Fibonacci sequences with a move between 2.618 and 3.618. And again, if we went back to Bannerman and we were to look at that analysis that we just performed, let me zoom this thing out. There's our analysis. If we were to do that same type of analysis of wave 1 and wave 3, just like we did with Ethereum, Ethereum had moved between 2.618 and 3.618. It puts us at about $120 or $30. If I were to move out, that's exactly where that fractal ends up. So I'm not saying that this is necessarily going to go there, although I think it's highly possible that it could go there. We can see the volume kicking up on the right-hand side. People are accumulating this. And playing with these fractals, I think, has some validity to it. We do have a very large lead-in pattern. This is a lead-in pattern that I normally see. Yes, it could go down further, just like this fractal, at any point before a very big move higher. Doesn't mean it has to do that, though. My take is to get positioned early, hold on to this bad boy, and ride it higher. Yes, it's going to be volatile. Yes, my account values are going to go up and down all over the place. But if you want big gains in short periods of time, that is what's required. So that is some of the things that I was looking at on the website and the trainings that I have, and I obviously videotaped it. I did a pretty big deep dive analysis into oil and natural gas. There's some crazy setups there where I think things could look very good and transpire into very big moves to the upside. So what we're seeing is we're seeing confluence amongst a lot of the companies. We're seeing the lead-in pattern. We're seeing the fractals be exactly the same as last time. And I know some of us do this analysis. We're pretty comfortable with whatever the short-term price movements do. We think that the fractal is the same as the last movement. So why are these fractals the same? This is just humans interacting with each other. It's human behavior. And they almost always repeat these patterns before large moves and even after large moves as well in the consolidation periods. So everything looks good from a human behavior standpoint, from the herd behavior, from a fractal analysis, comparing the two fractals. And now we just have to be patient and wait. The market conditions are all ripe for this to happen. We have heard some people talk about the bear case. I'm not convinced at all about any of the bear cases that I've heard. This isn't about how much supply there is. This is about money flows. Money flows are what drive these prices higher. We're seeing the money flows come in. We're seeing the volume kick up. We're seeing the fractals that are created before a big move. What indications are there in the charts that are showing us bearish setups? There isn't any. Now, could we go lower before we go way up? Yeah, we could get another 20, 30% lower before a very big move higher. It is going to scare a lot of people out of this trade or this investment. And that's what the markets do. They scare you out. They're volatile. You have to take the time to learn a lot of the stuff that even I'm just kind of talking about here to get you better prepared for the moves. the fractal here says that we could still go lower before we go higher. Do I trade 100% based off that fractal? No, I don't. I don't. Why? Because I don't want to miss the big move. The difference, the small move that we get, even though it could be 30 or 40% lower, could be, doesn't mean it has to be, is something that I'm willing to ride through. And I will continue to add into it if we get that pullback. It's just more of a buying opportunity, in my opinion. If you were to look at the risk reward here, that's the reward of the fractal going all the way up there if we were to repeat something like last bull market, which I think is a high possibility. And even if we were to pull on back down to like $1 or something like that, which is a possibility, or maybe we already did the full pullback at $1.60. That's kind of what we're going through. And this is the time where everybody's afraid because these bull markets happen right before bear markets. We have increasing interest rates, just like we had in all the other bull markets in the 1970s and in the mid-2000s. We had increasing interest rates. We had a bull market in the housing sectors. We had a larger demographic coming into home buying years. We had money rotation from higher interest rates, on and on and on and on. And all of the parallels that I can draw between those two bull markets, we have all the market conditions this time. So my question to everyone else is, why do you think the bear camp is right? What evidence do we have of a bear market? If there is bear market, evidence, I've been looking and I can't find much of anything. Having more inventory above ground isn't going to stop this move, I don't think, because we can see people lining this up. The number of investments that are going to work in the near future, I think, will be very few. You have to look at it from how many investments will work standpoint. Are bonds working out right now? Are bonds a spot to be? Let me show you what bonds look like. Tell me if any of you guys, outside of myself, because I have this channel and I've been sharing my opinions the entire time, which, is risky because people are going to dog you or whatever if you're not right. I said back in 2020 and 2021 that this is going to be a top. Look what it is. It's a top. And this thing is rocketing lower. It is getting crushed. Even pre-market, it's down, basically with interest rates rocketing higher. And we could have a crisis on our hands with interest rates. People are dumping bonds like no other. And just like I said, we are going to see the rotation of money out of bonds because of increasing interest rates and the pressure that people will feel from a decline in bond prices. Now, bond prices have been getting crushed. Let's do this real quick. This peaked at around 170 and we're at $103. 170 minus 103 divided by 170, you're down 40% in 2 years in 20-year Treasury bond prices. 40% is a shellacking. Now, here's the thing. If interest rates continue to rise, and this is interest rates rocketing higher, this is what they look like from this perspective. They are definitely breaking higher. We can see that there's a paradigm shift in the markets, declining interest rates, a new shift to increasing interest rates that I put back. I put this in there in 2021, and now we're still rocketing higher. The money is rotating in front of our eyes, and people are getting afraid from the short-term volatility. Let the short-term volatility work its way out. There's nothing we can do about that. We know the fractal's the same. We know the market's rotating. The question I have for everyone with this gigantic rotation of interest rates on the 10-year, this gigantic rotation of interest rates and a major breakout for the 30-year bond, you can see this thing is rocketing higher. Where's the bear data? Now, people say that interest rates are going to be the cause of why this all goes down. It could be for the short term. It could be. It might not, because guess what? Money's rotating and none of these assets will work. Bonds aren't working. They're getting crushed. And stocks aren't working either. So all that money has to sell. It's got to rotate into something else. This takes time, and it's a messy transition. These bottoms are always messy. Why are they messy? Because you've got an asset that is rotating and putting a bottoming in the same time that the other asset is rolling over and coming down. We have two assets doing the opposite thing, but are also somewhat correlated together as they get sold and bought and moved around, and the leverage in the system is tying it together. That's called, sometimes it couples up, sometimes it decouples, depends on the movement of the speed and the emotions and all that other stuff in the short term. The short term is very difficult to trade because it can go in any direction for any reason. But we are investing because this is a structural move in money flows. It's a paradigm shift in the markets based off of money flows. And uranium is exhibiting all of the characteristics of a previous bull market had in terms of the fractals. The way that this thing moved up is the same as the way it moved up last time before a huge move. But during these transition periods where money starts to rotate, it's just messy, and you have to live through it. That is what is required for the big money. You have to be well informed. You have to know all of these things that I'm talking about. You have to know the market conditions. You have to see how this all lines up. And it's just messy. So that's what I see kind of in these charts is the fractals are the same. We have very large moves ahead of us if these are overlaid. And all of the market conditions are ripe for this money rotation to happen. The number of investments that are going to work in this type of environment are very small. I think they're going to be very limited to energy and precious metals. Energy, because that's where the problem is located. So money's going to flow to solve this problem in energy. And precious metals, because people are going to get scared of currencies having problems. And when money rotates out of bonds, which it's doing, it's going to scare more money rotation out of it. So it's going to be a messy transition. I always had said that. It's going to be painful to ride through the volatility. And a lot of people aren't going to have the courage to ride through it. If you guys need help riding through this, I've got a lot more analysis than just this posted on the website. I did a huge one on oil and natural gas. I had some insanely good companies. We looked at a bunch of confluence across the sectors, showing you that we're seeing this across multiple companies, across multiple regions, across all of these different sectors. And it's a flow of money that is really causing this shift. It's not sector-specific information based off of some of these inventories, although some of the inventories are physical are getting very low. So there are driving factors behind this. I think it's energy related. We can see a squeeze across the entire energy sector. It's going to permeate itself and move into other sectors and commodities of real things. And I think that the opportunities here are absolutely ridiculously good. Based off of previous fractals, the way the lead-in patterns are for herd mentality, we're seeing it across not just this group, but a whole bunch of different things. So if you guys need help, join the Platinum membership. I can help you. We have a question and answer session coming up Sunday, 5 p.m. Mountain Standard Time. You can sign up, and if you go to the website, just to show you guys, if you're a Platinum member, you can see this. But I added Zoom meetings, a quick link to the meetings where you can just click it and click right in, and you can bypass everything. You don't even have to search for anything. So I did add that for everybody. I know I had some people wanting to have a quick link. It's right up there. I added that. Become a member. These are all the posts that I have where I'm sharing information. And the Platinum membership, I think, is the most valuable because you can see what I'm doing. And I talk about what I'm looking at, what I'm buying, when I'm going to buy it in rough time frames. And yeah, that's the value there. I also have a bunch of financial education on here about market conditions, ratios, and why all this stuff works. And I also talked a lot about it in my technical analysis trading video that I just posted, technical trading training Thursday here. And then the video that we had for the training. It's right here, Platinum members technical training video. It's already up on the website, just to let you guys know. But that's what I've got, guys. Hopefully you enjoyed it. Appreciate it. And we'll catch you next time. This is Finding Value.